Ladies and gentlemen, Realty Plus it is. It is spelled as R-E-A-L-T-Y, but given the way they are going forward, I'm sure it will define reality. आगे जाके अगर ऑक्सफोर्ड में अगर spelling change हो जाए reality के जगह पे reality, don't be surprised. Please give it up. 21st reel of Realty Plus, ladies and gentlemen. For more details, of course, you can get in touch with Ms. Tripti, Kedia, publisher and business head of Realty Plus. Thank you so much. We're going to begin the event right now, ladies and gentlemen, with the lighting of the lamp and the Ganesh mantra. Can we please have this on stage for all of us? And in the meantime, I'll call our guests to do the honors for all of us. May I please request Tripti Kedia, publisher and business head, Realty Plus, alongside Sapna Srivastav, editor, Realty Plus, Mr. Kaushik Shah, National Director, Occupier Strategy and Solutions in Industrial and Logistics, Mumbai, Knight Frank, India, Anshu Sarin, CEO, 91 Springboard, Ashish Goenka, Director, Marketing and Strategy, Redbrick Offices Limited, Rahul Kanungo, National Director, Sales, Office Space Solutions Limited, Sanjay Chatrath, Co-founder and Managing Partner, Incuspaze, and Vaibhav Joshi, Executive Director, Tablespace. Can I please request all of you to please join me over here on stage? And ladies and gentlemen, let's be the kind audience that we are known for being here in Mumbai. Can I please request all of you to clap and appreciate their presence for doing the honors for all of us over here? Can I please have all of you on stage, please? Sapna, if you can please join us as well for this.
Vakratunda Mahakaya Suryakoti Samaprabha Nirvignam Kuru me Deva Sarvakaryeshu Sarvada Vakratunda Mahakaya Suryakoti Samaprabha Nirvignam Kuru me Deva Sarvakaryeshu Sarvada.
Thank you so much to all of you for doing the honors for all of us. Pleasure indeed to have all of you over here. And ladies and gentlemen, itne acha shuruaat hua hai. Ganpati Bappa Moria, can you please all repeat after me? Ganpati Bappa! Thank you so much. Very sweet of all of you. Ladies and gentlemen, it's very important that we thank our partners as well from the bottom of our hearts, because without their support, this event truly wouldn't have been possible. We take this opportunity to thank our partners, Managed Office Partner 315 Warwick Avenue, PropTech Partner Absolute CX by Insomniacs, Co-Partner Nemechik Group, Business Media Partner BW Business World, Online Media Partner Exchange for Media Group, and of course organized by the wonderful, wonderful team of Realty Plus. Ladies and gentlemen, we will be now swiftly moving to the session. This is going to be, it's my honor and privilege that I welcome all of you with great enthusiasm to the 6th edition of the Realty Plus Flex Spaces Conclave, which is going to be a gathering of trailblazers who are redefining the future of workspaces. It's going to be a panel discussion to begin with, but before that, if I may please request all of you to kindly please put your phones in silent mode, because we have our distinguished speakers over here coming up on stage and speaking, so we don't want to distract any of them over here. So we'll request all of you to please kindly keep your phones in silent mode. Thank you. And what I'm going to do is, in the meantime, when they get the chairs and tables placed, I'm going to be introducing our honorable speakers over here. We have everybody over here. What I'll do is I'll first introduce our moderator, and then I'll be introducing our speakers in alphabetical order. And once I'm done sharing the bios of everybody, I'll request all of them to come together on stage. Ladies and gentlemen, the first panel discussion is going to be about managed spaces, market trends, and demand from enterprises. I'll repeat the topic for the first panel discussion for you all. This is going to be about managed spaces, market trends, and demand from enterprises. Ladies and gentlemen, this session is going to be moderated by Kaushik Shah, National Director, Occupier Strategies and Solutions, Knight Frank, India. With an affluent experience of more than 15 years in leadership roles, Mr. Kaushik brings an intense understanding of the office market. His expertise lies in strategic planning, forecasting, sales, financing, closing transactions, and negotiating deals pertaining to commercial real estate. He takes pride in shelling out results that deliver value and exceed expectations, and building and nurturing relationships with clients and industry professionals based on trust and, of course, transparency. Ladies and gentlemen, I'll be introducing our speakers now for the first session in alphabetical order. We have the pleasure of having with us today Anshu Sarin, CEO, 91 Springboard, a proven high-energy, smart, entrepreneurial, C-level travel and hospitality executive. Anshuji has worked in India's hotel and airline industries. As CEO of 91 Springboard, Anshuji is dedicated to maximizing the company's success while prioritizing its best interests. She is as comfortable in board-level participation as she is rolling up her sleeves and working on operational challenges as well. Challenge doesn't scare her, it gets the best out of her. Ladies and gentlemen, we also have with us today Mr. Ashish Goenka, Director, Marketing and Strategy, Redbrick Offices Limited. Ashish ji is an accomplished entrepreneurial business and sales leader with over 2 decades of extensive cross-sector experience spanning real estate, banking, consulting, and of course, technology. A digital native professional, he possesses expertise in managing complex sales and cultivating client relationships for the better. We also have with us today Mr. Rahul Kanungo, National Director, Awfis. Rahul ji is a real estate professional with over 16 years in the industry, skilled in property acquisition, market analysis, business development, and negotiation, of course. He combines data-driven insights with his strategic solutions to drive growth and deliver value. Known for his problem-solving skills, Kanungo crafts tailored solutions that meet clients' unique needs, from long-term growth to, of course, immediate returns as well. We also have with us today Mr. Sanjay Chatrath, Managing Partner, India, Incuspaze. Sanjay ji is a visionary entrepreneur and strategist with over 2 decades of diversified experience in commercial brokerage covering office, residential, land, industrial, warehousing, and capital markets. Based in Gurgaon, NCR, he oversees the overall operations of Incuspaze in India, focusing on providing superior services to clients, strengthening the company's presence and driving growth all over the country. We also have with us today Mr. Vaibhav Joshi, who is the Executive Director of Sales, Tablespace. Vaibhav ji brings over 19 years of deep expertise in real estate sales and strategic client partnerships. His career spans leadership roles with globally recognized firms such as CBRE and Cushman & Wakefield, where he honed his skills in driving business growth, managing client relationships, and overseeing the P&L to deliver successful outcomes. Ladies and gentlemen, the guests for the first panel are here, ready for all of us. Can I please have a huge welcome for all of them and request all of you to clap loudly. Ladies and gentlemen, this is just the beginning of the morning. It's going to be a long day. ये तालियों की गूंज थोड़ा और जोर से please can I expect from all of you over here. Thank you so much. Like always, you all are kind enough. Request you all to please take your seats. That's fine, sir. You all have created your own legacy, so it doesn't matter that way. Please give them a huge round of applause once again. Ladies and gentlemen, opening up the floor for you for the first panel discussion, and over to you, sir. Yeah, I think, how many mics do we have? 1, 2, 3, 4, 5.
Hello. This enough?
Sharing is caring.
Thank you, Realty Plus, for inviting us and organizing this event. I think it's an important discussion today, given the size of the industry and the importance of this particular segment in our business. Why is it important, and why is it important to have this kind of discussion today is the numbers are staggering. If I had to present the statistics for this industry, just about last year, 20% of the total space take-up in the country, which was overall space take-up was 72 million square foot, was taken up by flex spaces, which is about 15 million square foot that was taken up by the flex industry. It's unprecedented. It's never happened in the past. And the acceptability of this concept from occupants is far higher. That's close to, so 15 million square foot is close to about 300,000 seats that have clocked in last year. That's a huge number again. The industry overall, since COVID, obviously in COVID people had their downs, but from there on, it's grown at an average of about 90 to 20% year on year, CAGR of 19 to 20%, which is again a great healthy number to have. And this year, while there have been some IPO listings that have happened last year, which has given confidence to other operators as well, we are expecting with the DRHPs that are filed and the upcoming DRHPs, our estimates are that the listing, the IPO listing would be close to $1 billion, which is significant. So $1 billion the market is going to support, and I believe the numbers are far good for investors to actually take a punt and invest in these companies. So with this, it requires a discussion with the panelists. I'm honored to have these panelists on the dais. I have the easier part to ask the questions, and they have the tougher part to answer them. We have Anshu Sarin. She's already been introduced, but she's the CEO of 91 Springboard. We have Mr. Chatrath, who leads the Incuspaze business, and he's here with us today. We've got Rahul Kanungo, who is the National Director for AWFIS. We've got Mr. Goenka, a veteran, and been with Redbricks for long. Just made you sound old. And Vaibhav Joshi, a friend as well as been a peer in the industry. Now today he's with Tablespace, Executive Director Tablespace. So thank you for coming over, and we'll straight get into questions. The flow would be that we would be asking these questions and then open the forum for audience to ask certain questions to the panelists. So let me start with Vaibhav first. We've been hearing the buzzword of AI tech, including Modi keeps talking about it, China releasing DeepSeek. So I wanted to pick your brains on what you think, what is the role of technology and what is the role of AI in this segment today? And are you being able to implement those things in your business? And are you seeing further changes in that segment?
Thanks, Kaushik, for the question. Before I give my answers to this question, I would just like to first thank Realty Plus for yet again giving me the opportunity to participate in this panel discussion. And I'm glad that I'm sharing this dais with the industry experts, my ex-colleagues, my friends, the trendsetters in the industry, so-called flex or managed office. So thank you, and I'm glad. Kaushik, to your answer on technology and AI. See, managed office over the last several years have gained significant traction due to its advanced technological innovations. As you rightly said, I would like to quote again, 22% of the office absorption last year in 2024 was driven by either flex or managed office industry. I would like to quote from one of the reports by JLL that's called Future of Work. Approximately 77% companies have decided or are actually investing in smart building technologies. Around 70% of the CREs believe that at least some bit of their work would be driven by AI by 2030, which will help them to focus more on strategic business decisions. Technology has always been the backbone of the flex industry and the managed office industry. While I'll quote managed office more because Tablespace is a managed office operator operating since 2017. But I'll also quote one more thing that, since inception, technology has been the backbone and has been at the helm of a business for Tablespace. We have a very large in-house tech platform suite, we call it Reform 3, which we use as tech platform, proprietary to Tablespace. Some of the things that we use, some of the tech tools that we use from a technology point of view is our advanced design studio tech, which basically generates layouts and 3D drawings, bases our standards, bases our clients' requirements and their standards, keeping in mind NBC norms in seconds. And we can make multiple changes using this tech platform. We have our office health monitor tech, basically which checks the FM of the office considering, keeping in mind all the health parameters. We also use delivery management system, which is a very interesting tech tool that we use, which not only helps us, but also helps our clients to have a seamless office experience. You know, when we make or when we are constructing an office for a client, the clients gets access to this tool. They can see the real-time under construction office pictures wherever they are sitting across the globe. All the reports, the project schedule, the SLDs, the single line diagrams, the layouts, the 3Ds, the approved drawings, etc. Everything is in the platform. I'm sure most of you would agree with me that when a traditional office is built and it continues for over a period of 5, 7, 8 years, and once the client or the occupier decides to make certain changes in their office, either the admin guy who had done this office moves away from the company, moves out from the company, or that architect would have lost the drawings which he made for you 7 years back. But we have the repository through our tech platform within the Tablespace through the delivery management tech tool. We also use operations management tech tool, which gives real-time data of how the office has been kept or upkeeping of the office, how the operations were done. Every day, every week, every month, there are reports sent to our clients basis that. Sitting here, I can tell you what is the temperature of our server room in various offices just using the app over here. We also install a lot of auto dialer systems which gives real-time reports to our clients as how their office is functioning, if there is any issue in their office, etc. Our AI, seamlessly integrates with the office operations, which keeps a track. I'll give you by way of an example, like lighting system, air conditioning system, for that matter, air quality check, keeping in mind either the external conditions like the external weather conditions or basis individual preferences. So this is what we do in terms of technology, and this has helped us as well as our clients to have seamless experiences.
That's superb. I think Elon Musk should take a cue from that. But I just wanted to also speak to Sanjay ji on, you've been looking at, yes, Sanjay ji, you've been looking at Incuspaze and you've been part of the journey. I think 2015 is when you started this. And are you seeing the acceptability increase when it comes to managed office spaces? Flex is a different segment, but I've been witnessing for the last 10 years the terminology of flex space or the concept has been changing. So are you seeing that when it comes to occupiers? Is it an easier conversation to have in terms of having that conversation with occupiers, that would you be able to get into a managed space versus you doing a conventional space?
Thanks, Kaushik. I think, Kaushik, again, there's a very high level of acceptance as of today amongst the corporates, amongst large corporates. I think one of the days when we used to sell a concept of what the co-working and the flexi offices, it's synced in, so they understand exactly what the concept is. And I think we spoke about the numbers. You spoke about doing a 30%, 16 odd million square feet. I'll just quickly touch upon that as well. So I think last year we did about almost 70 million square feet of overall gross leasing in India. And out of that, again, about a 16 odd million square feet, as you rightly said, was a flex pie. Now, if we really sort of see the sort of distribution of that 70 million or the 16 million, I think majority of the leasing sort of happened in South. That's one of the largest market anyways, right? So Bangalore and then Chennai and the Hyderabad. That's the largest market. it's about a 51-52% of the activity happened in that city. Followed by North, which is Gurgaon and Noida. Again, it's really picking up. Both these cities, about a 32% was in North, and then followed by West, which is Pune and Mumbai. That was about a 17 to 18%. So the numbers, I think, speaks for itself. Apart from that, I think we've seen a lot of demand. In fact, high demand in tier 2 cities. These corporates post-COVID, they started setting up their satellite offices and some sort of test runs to see, how it goes, especially in the tier 2 cities. And in the last 2 years, from 22, 23 to today, things have really worked out pretty well for both for the employees and for the employers. And today, these large corporates are really ramping up their workforce in these cities. So cities like Jaipur, cities like Lucknow, like Ahmedabad, Kerala, Kochi. These are some cities where there's a lot of traction which is happening, and in fact we've got a different problem to solve there because we do not have enough stock or grade A supply there to give it to these large corporates. So we've gone to these cities and we started partnering with these local landlords and developers, and we've signed up these under construction buildings. So again, to answer your question, I think there is a lot of acceptance and clarity now within the corporates. And even this year, I think we were just discussing the numbers. I think the forecast is close to about 100 million square feet, which is never heard of. And even if we do about a 35% of the pie, that takes us to about almost like a 30 million square feet, which is huge. So this is only here to stay, only here to grow. And even, we've been having a lot of discussions with the clients. And I think one of the common things which is really coming out of these discussions is that they want to rather focus only on their core business. They do not want to focus on real estate. They do not want to get into managing the offices or doing admin work. Rather, they want to focus more on the core business. So I think the market is slowly, gradually moving towards the acceptance and maturity level. And I think pretty soon we will see these large corporates will start outsourcing their entire sort of real estate function to flex operators like us.
Absolutely, and we've already been seeing, Googles of the world and Microsoft, they are also getting into flex office spaces. So it's no longer that 20, 30 seats or 100 seats. You're talking about 1,000 seats plus, which is more like a permanent setup. And the notion of flex spaces earlier was temporary, 6 months, 9 months, and that has changed overall.
And again, I think just to add, you see all these big players, whether it's Google or IBM's or the Facebooks or Microsoft, they've been sort of outsourcing their real estate function. It becomes like a cost center for them, obviously, by managing the entire sort of real estate function. It gets very easy to sort of outsource, and obviously there's a huge sort of benefit kind of cost optimization there as well, because the infrastructure is being created again.
I think outsourcing is the key strength for India any which ways.
Yeah. So yeah, I think this is only here to stay and grow.
Absolutely. So Anshu, over to you. Wanted to see your reaction on the design change. I think you come from a hotel background, and we've never seen fancy offices in the past. Earlier it used to be all cubicles, workstations with a lot of partitions, a lot of secrecy. And nowadays when you walk into certain offices which are newly designed, they seem more like a hotel or a mall, wherein, the space is quite vibrant. The colors are vibrant, there's biophilia around. So are you seeing that change? Because I see most brands, most operators changing. There is a version 2.0, version 3.0 in terms of, how they're designing offices. Are you seeing that? And what kind of changes are you incorporating in your new centers?
So on a lighter note, I think I'm echoing those colors by wearing a brighter and a different color. So the way that we want to approach this and the way that we are taking it forward is basically splitting it out in two parts. One is the financial nuts and bolts of the business and what should be the metric which should define it for us, which gives the company and the business the financial stability, which to me is as straight and simple as yield. So let's keep that on one side of it. On the other side of it, respectfully, and I'm fairly young, and I'm also fairly young in the industry, so the way that we are taking it forward and approaching it is a simple thing called design thinking, which is basically just step into the shoes of the customer and say, what is it that you would like it to be like? And then have that. And the primary reason why I say so is because then eventually this would get commoditized. And therefore, everything will start looking as the version 2.0 of pretty much everybody, right? And hence, what we want to do in some of our new centers, and that's what we've started absorbing, is to understand for the places that we are creating as common places for, let's say, 1, 2, 3 setups versus something for an individual company. We like to sit with that company and understand what is the culture, what is it that you want to inculcate, what's your core business, and how do you want to make that work, so that we design the workspaces thinking how it would turn out to be for you, as opposed to us just saying, okay, I will build you so many pods and so many collab areas, and there would be an atrium lobby, and there would be food and beverage of X sort, right? And I think the thing that comes out is there are 2, 3 things that one needs to look at, right? There's generational gap today in the workforce, right? There are fuddy-duddies like me, and then there are young people like you guys, right? We have a different way of thinking, a different way of how we understand office space to be. And we don't want an office space to become, no company would like their office space to become something which alienates any of these generational gaps. So we need to create it in a space which does not alienate either of the two. The second thing is that it's like the Venn diagram, right? There is some inner circle which is concentric for everything, common points for everything. Those basics is what we want to make sure that we are absolutely great at, which is, let's say, food and beverage, logistics, internet speed, some of those what I call order qualifiers or just the hygiene issues. And then look at what is the activity-based stuff. So if somebody says collab area or the fun on the recreational area, what are the different aspects of it, and what is it that we can do which is a little central to how a consumer thinks and uses it. So as opposed to just calling a wellness room and just putting just making it an acoustic, well-acoustic place with just 2 couches over there, what else can one do to be able to enhance it? That's the endeavor, that if we are able to create products of that nature, because eventually I believe that we are in a solution business, we are not in a product business. And therefore, all of these would make a lot more difference to it.
Absolutely. And thank you for calling me young, Anshu. It makes my day. Rahul, over to you. I think as a company, AWFIS probably was the first one to bet heavy on tier 2 and tier 3 cities, while others have also gone in. But I think you guys took a punt in a lot of cities, including I remember your centers being in Chandigarh, Ahmedabad, Indore, probably some south tier 2 cities as well. What has made AWFIS to think on those lines and open up these centers? And are you seeing, we've been talking about tier 2, tier 3 cities growing on an exponential basis, and government is trying to promote it. So there's, migration to a certain extent could be reduced to these tier 1 cities. Are you seeing more and more occupancy in these tier 2 and tier 3 cities?
Thanks, Kaushik. First of all, I think add up to what already Sanjay just said. There's been a tremendous growth and potential that we are seeing in tier 2 and tier 3 cities, especially in last couple of years, post-COVID, we've seen even more of that happening. As you rightly said, I think we were probably the early movers. In 2018 was our first center that we opened up in Chandigarh. And tier 2, tier 3 cities have had a tremendous growth plan that's coming in, and we are seeing the same trend happening in the years to come. Possibly out of our 18 cities that we're present, 9 cities are, 9 cities are out of this tier 2, tier 3. Now, I'll mainly focus on 4 factors which are driving this change and are building the trend. First one, I think the government support. It is the GCC's expansion, especially the government, the recent union budget had a government national framework around this, which is mainly eyeing on the skilled talent that you're getting in tier 2, tier 3 cities, the optimized operational costs that you can factor in. Obviously, the rental functional, which is a major part, which is much, much more cost effective when it comes to tier 2, tier 3 cities. Additionally, I think even the hybrid environment, which is adding up to this factor, a lot of these, especially the IT sectors and the BFSIs, have seen a lot of hybrid concept and people wanting and open to be in these cities, which opens up their horizon of having bigger workforce coming out of these cities. So Indore has become a very big hub. As you rightly said, Chandigarh, I think Jaipur, Ahmedabad in itself with the gift city coming up. So all of that had really added up. SMEs have been mushrooming a lot. Those are startups and SMEs, especially out of these cities. You have a lot of these founders who are based there and are forming their new teams. So smaller cities, Kochi in the south is seeing that to happen. Lastly, even the government reforms have been quite focused so that they can offer infrastructural betterment, better quality buildings that can come up. A lot of these developers have focused on these cities to make such kind of infrastructure there. So all in all, I think tier 2, tier 3, as I think Sanjay also said, I think it's there to stay. With the way densified our main cities are happening, there's been a lot of focus, otherwise also for all the players now to focus on these cities. So we are seeing a lot of potential coming out of that.
Great. I think the other thing that I wanted to add here is, post-COVID, the work from home, where people kind of migrated to the hometowns, that has also fueled the demand in these cities. Because there, people would rather get the same pay and work out of Indore rather than working from Mumbai, if you had the choice.
No, 100%. I think that's been a trend. Also for the companies also. A lot of these companies have been quite favoring that, and that has given them more flexibility from that aspect. So it's made it a win-win scenario for both the sides.
Great. Ashish ji, we've had the honor and pleasure of working with Redbricks on some unique transactions. And I think the key thing where people are favoring managed office spaces is the flexibility, which was the core focus area, and everything else was revolving around it. Be it, the CAPEX funding, be it the OPEX. I've been a part of certain transactions where you've carved out some unique solutions which was beyond our thinking as well. So could you just enlighten everyone on some unique things that you've worked out and how it has helped the clients?
So firstly, thanks for, again, giving us this opportunity to talk, and I feel quite privileged to be on such great company. And stop calling me G and veteran, बुड्ढा क्यों बना रहे हो यार? बाल सफेद हो गए, but ठीक है, अभी भी जवान है. Anyway, coming back to business. So, I mean, flex as an industry has been traditionally more to do with co-working and with then serviced offices, and like I think co-working we had a previous avatar as well under Bombay Connect, which was the first co-working space in India, and then I think 91 was one of the leaders of that co-working revolution to start with, and then it's evolved from then to become serviced offices were always there, and then the managed concept came. There's lots of new concepts that have come up, right? So at Redbrick now we have solutions for all of that, for the co-working piece, which is a small part of our portfolio now. We have some ready-built serviced offices, which also do very well, and then there's obviously the larger managed place. So I think Flex actually incorporates all of this. It's just a new way of looking at commercial real estate, and we often talk more about it from a client perspective. And yes, there's a lot of structuring that can be done, a lot of interesting deal structures that can be built to make things work for everyone and build in that kind of flexibility. But the idea of flex just being in terms of term or lock-in is now kind of almost passé. That is still, there's different products that serve people who want a space, 2 seats for 5 months, 4 months, and there's a different product when you talk about serviced offices, which are slightly longer period, but ready-made offices, and then managed offices, which is where our forte is, which is more about built-to-suit offices for larger requirements. And the flexibility that we show comes all the way from which building to take, which space to design, how to design the space, how to structure the deal both with the landlord and with the client. I'll give you some examples of also a different level of flexibility built into how at least Redbrick work. So when you have a deal with Redbrick or when you have a lease with Redbrick, irrespective of, it might be a 5-year deal, it might be a 3-year deal, the biggest challenge there is around the fit-out cost and how you amortize it, right? Because that's the largest chunk of the kind of sunk cost, if you like. It's not a it's already done, and that has to be amortized. So a lot of ways we've structured that with clients. Sometimes you use a larger amortization period, sometimes. But in general, the flexibility that we offer as a brand is that no matter who you are, your lock-in is with Redbrick as a brand. So you can move around within the Redbrick portfolio, and we will, even if we've built, and we've done this for a large Indian corporate that was in Pune. They were sitting on a 5,000 square foot space, which we had custom built for them. And then they suddenly saw tremendous growth, and they wanted to expand to almost a 12,000 square foot space, and we didn't have space in that building. So we moved them lock, stock, and barrel to another building which they chose, and we built a new center for them there, and now we filled up that center. So that's the kind of flexibility we offer. Now sometimes there's clients who come in and they are, irrespective of anything else, they only want 1 year. They don't want to commit for more than a year. So we'll figure out a way to make that happen even without having to charge them a ridiculously high amortization charge on the fit out by spreading that across and structuring a deal in a different way. We also buy assets. So sometimes we use that as a way to make the numbers add up. So there's lots of ways you can do this, and I don't know how much time I have to give you real life examples of. But I think something that a lot of people don't talk about in this industry, which is, I think, quite key, is that we also provide flexibility to the landlords. Because a landlord, a large landlord like, DLF or Panchsheel or Raheja, they're building massive floor plates, right? Because that's how the buildings are built now. Now, they don't have the flexibility to start cutting that into 10,000, 20,000, 50,000, sometimes if it's like a much larger floor plate. And they don't want to do that, and they don't want to get involved in that piece. They don't want to do the fit-outs. They don't want to get involved in any of this. Their business is building and leasing. So we're providing, as an industry, as a flex industry, we are providing them the flexibility to be able to attract smaller clients, to be able to work with a much larger section of clients that were previously stuck to small buildings in Bandra and wherever else they were, or working out of bungalows which are converted into offices. So in a way, that flexibility is not just for the client, it's also for the landlord. We, as an industry, I think we provide a platform that helps to solve a demand-supply mismatch problem on both sides. And I think, I don't know if that answers your question, but I think that's what I would say.
No, I think it did. I know what kind of flexibility you've shown to the clients, but I think the key is, be it the amortization, be it the OPEX, be it the space take up, surrender, you guys have been flexible on those kinds, and that's where the crux of the industry is. If you can't provide those kind of customized solutions, that's where the client comes talking to you. A quick question to Anshu and Rahul both. If I've been in the industry for the last 18 years. I started when there was an era wherein you had those cubicles and suites which were confined. You had 2-3 people working from there. Then came in an era of probably AWFIs, WeWork kind of coming up with trendy, funky offices. And then there are people saying that, you tell me, you want a green, you want a red, you want a blue, I'll design it as per that. completely customized, really nice, good-looking offices, sleek offices. So how are you managing the transition? Let's start with the ladies first.
Okay, so, and I'm not trying, I'm just simplifying it in a thought process, but I'm not by any means saying that larger managed spaces, built to suit, etc., that you guys do fantastically, is less complex or less, or anything less there. It's just that it's easier because as a client, you can have an interaction, you can understand that, and you could probably provide a solution. But when you're trying to do the same thing for A, multiple sets of people, and B, if you're doing it speculatively, when you're doing what I call the revenue arbitrage business of smaller teams, etc., it just becomes a lot complex because you have to think through for them and be able to design that. Now, again, the way that we are thinking and the way that we are doing, and that's something that 91 did very well with the customer segment for who we created the business in the beginning, which is, as Ashish was saying about the co-working, smaller teams, startups coming in and wanting to create a space for them, is exactly that, right? We thought like them, we behaved like them, and we created something for them. Where am I going with this is, again, that what do people want? So when Sanjay was talking, for example, that companies want to focus on their core, my job or our job is to make it as frictionless for them. Which means instead of having somebody attending a hub as a hub attendant, whether it's a great security person or a hub manager, the idea is to create a concierge kind of facility which makes it frictionless. So it could be any sorts of questions that the person comes up with and they are able to solve for it. That's what you go to a hotel concierge for, and you expect them to solve every problem, not just by the SOP, but you want them to say, okay, I don't have the solution today, or I don't have it right now, but let me just figure it out and come back to you. So that's very simply put a concierge kind of a facility, but I think it goes a huge way in trying to understand. And what we do is, me and some of the team that we've now created for product, we actually sit in our own centers. I sometimes sit behind the hub desk and I just keep listening to what customers come and ask our people, how do they respond to it, are they able to respond to it? And you'd be amazed the kind of interaction that happens with them which changes it. And I'm going to take another second to say that the big difference is that there are two people that sit in an office. One is the customer, which is the admin guy, who is doing the rest of the nuts and bolts and, doing the deal. And then you have the consumer, which is the employee who's actually ending up consuming the product. And you need to be able to cater to the customer as well as the consumer. Because if the consumer is not happy, eventually the customer would have some issue at the end of it, right? So some of the things that I'm speaking right now about are very consumer-centric in that. So one is concierge. The second is something that we're looking at and doing very differently is for our restrooms that we build, right? It's not just about the basic hygiene and cleanliness, but it is about creating restrooms which give you that experience of how you do it in a hotel, right? So if you go to a hotel customer life cycle, you can have a great lobby, great fit outs, great flowers, and then suddenly you go to the restroom and you see this really badly utilized or badly maintained space, and that's your end of your impression, right? So that's the second thing, for example, that we look at differently. The third, like you very rightly mentioned, that in these open workspaces that a lot of us created as great fads, and they are good, you do need these smaller spaces where you can have a conversation in isolation, right? What kind of telephone booths or pods that we are able to create and in what kind of space utilization is something that's, again, things that we're looking at. So short of it, I'm saying that we're looking at both softer and hard product and being able to build some part on the design element and some part on the softer side of the business to see how does it, to basically give you that same frictionless experience. Does that kind of make sense to you and where you will?
No, well said. I think I've seen that change, and I mentioned about version 2.0, version 3.0, and there are more versions coming in because increasingly the clients are getting used to it, right? So they are asking for more. Can you do this as well? So they keep pushing you, and I think there's a solution. As an Indian, we are all, jugadus, if I can call it. We always come up with a solution. Rahul, over to you.
So I think adding up to points that you and Anshu just mentioned, as you rightly said, I think historically the flex was always considered to be a temp solution, something which is a stopgap, which they can do it for a while and not for a longer term. There's been a huge shift in thought process, not just from multinational, I think even the Indian conglomerates have thought about it. And we're seeing that even all of them, especially who've always been historically in a conventional setup of office, they're not quite opened up to the whole concept that a fully functional flex office can be their own office also. That shift has happened, and primarily happened because we are able to offer those kind of customizations to them. The bouquet of services now can be provided where they can pick and choose, not just about their fit outs, also about what they want. So for example, they do not want the lease in them, or they want the lease in them, it can be possible. If they want the OPEX on them, or they want the CAPEX on them, all of that can be offered, accordingly. For us, especially, a DNB is a very big advantage because we are able to cater the DNB in-house. And again, offer it as per transparently as they want, as they would have done it themselves also. Now, obviously from our side, because all the flex ones across India, they've been operating on million square feet, right? So the buying powers are way more far better of what we are able to give them vis-a-vis what they'll be able to get for themselves. I think secondly, for us also, historically we've been around 90% flex, and I'm talking about 3-4 years back, and around 10-15% of managed, which has now drastically changed. We are around 45-50% of flex, and now becoming a 45-50% of managed office. Now this is driving the change. Why? Because all the customers, even like for example, we have 3 bouquet of services, which is Office 5.0, Office Gold, Office Elite. Now even in them, we have to customize ourselves and open ourselves in a horizon that it's not that we've pre-built something. We have to make those banquets, as we call them, where we can further customize even if we have pre-built them. Now that's coming, even for a 50-seater, we are open to have that customization done, which is inbuilt of a managed office solution. So it's not typically a managed office of 50,000, 1 lakh square feet or something. Even as small as 50 seats is a managed office these days. And these are the clients, especially the clients which are like GCCs, which are now coming to India. What we had around 1,400 odd GCCs earlier, we're talking about 2,500 odd GCCs now, which is possibly around 4.55 million square feet of leasing that they're doing. And these are 40, 50 seats, which are now eventually growing up to 2,000, 3,000, 4,000 odd square feet, and then eventually growing up in India. So, flex and manage is a quite blended proposition. We are all driving towards that, but definitely a customized solution where they can get everything the way they want, to the level that they want, is here to stay. And that's why the managed office proposition has been growing. And we don't have to explain it to anybody now. I think it's a self-explanatory, thanks to everybody, I think, opening up that horizon. And similar way, there's a banquet of services getting attached. So concierge services, the mobility services, which are adding up. So all of that puts together a great bouquet for the client.
Thank you. Vaibhav, GCC is the buzzword. So governments are forming policies around it. What's your take on it, and what are you doing to cater to that demand?
Very interesting question, Kaushik. GCC today is actually the talking subject across the industry. I'll tell you one thing. I'll go a little in the background of it. When companies started to setting up GCCs in the country, it was all perceived as, or it was rather, back office support for various departments catering to the services to various departments across the country. It was seen as a back office support setups. But over the last few years, GCCs have emerged as research and development offices, decision-making offices. They have become center of excellence across the industry. So, and this is one reason why even the governments of various states, including our Indian government, has started talking about GCCs, giving them incentives, framing policies. I was fortunate to be a part of the panel discussion with Karnataka government a few months back, when they had launched a GCC policy at that point of time, which was very interesting to know. As we were discussing, 21% of the space last year was absorbed by managed office or flex industry. GCCs contributed to approximately 31% of the total absorption last year, which is around 23 million square feet. So which itself is a dynamic shift, considering few years back when the GCCs were setting up in India. What does a GCC want? They want, from a location standpoint, they want robust infrastructure of the city. They want places where good talent and resources are available, low attrition rate. But from an office setup, they need scalability, they need flexibility, agility, to be provided to them. We as Tablespace over the last few years have emerged as one of the top enablement companies for GCCs in the country. We have over 70 GCCs in our portfolio, and which is growing. Though for the simple reason, we strongly believe in providing 100% customized managed office solution which can cater to the growth of these companies for a long period of time. We provide scaling up, scaling down options to them even within the lock-in periods of our contract with them, which also gives a bigger boost for GCCs to build that trust and faith in us that our offerings are not basis just a business, but actually considering their requirements and their future requirements in place. At the same time, I'm sure you would be aware, setting up larger offices, larger GCC setups, typically on a traditional way, companies take approximately 10 to 15 to 18 months to make these offices, large-scale offices. At Tablespace, using our expertise over the last 8 years, we can deliver and construct these spaces in a span of 60 to 90 days. And thus, the companies can actually focus on their business immediately and save money also, which is very important. This is one reason why companies like Apple, Google, Microsoft, Tesla, EY, Ericsson, Shell have trusted Tablespace and have given us the opportunity to give them larger offices across the country. There's one more interesting thing that I will tell Kaushik and to the audience over here. Last year, we launched another business model within Tablespace called Suites by Tablespace. So Suites is basically ready to move in, very high quality office space for our clients, which can cater to requirements for, because typically we as managed office were always focusing on giving larger office setups to our clients for a long period of time. And as Rahul was mentioning about, shorter tenure offices, etc. So Suites, while we have made Suites to cater to requirements which are for a short period of time or for a smaller office setup, but gives enough platform to our clients to take space and grow over a period of time. We have done several transactions with some GCCs where they entered India for the first time. But while they were very confident on their growth in future for a short, mid and long period of time, but they wanted to start small. Suites became a very big catalyst to provide offices to them in the country. Yeah, so that's what, I love this topic, by the way, on GCC.
I think we can go on in terms of GCC. It's anyone setting up GCC in India is just about growing. You start with 50 seats, 100 seats, and it reaches 1,000 seats in no time.
Absolutely.
So there's enough success stories around it. Ashish, I'll cut the G. So, you've been one of the operators, which is probably one of the few operators which looks at purchasing assets. Most of the assets in Mumbai, are purchased by you. What's the unique advantage that, as a result of which you can provide to the clients when you purchase assets, as opposed to leasing it?
Okay, so I'll answer that question a bit differently. I'll talk about something that Vaibhav just talked about in terms of GCCs and take it forward from there. So the question is, why are GCCs coming to India? And the answer is, for me, one word: talent, right? There's a huge talent pool in India. And going back to what Anshu and Rahul were saying, I'm sorry, I'm very bad with names, which is not a good thing to say. But going back to what they were saying, that this talent of India needs, they're not looking at your workspace purely as a place they come to work. because they would much rather work from home or from cafes or from wherever else they want to work from. So they are looking for workspace as an experience, right? Now, so I think as an industry, and at least Redbrick strive to create workspace experiences which are above and beyond what used to be and what a normal workspace used to look like, feel like, the experience of it, the concierge services, even all the 5 senses, etc., right? So in order to create amazing experiences at the workspace, it's quite interesting if you can have control of the asset, because then you can actually change things more easily. I have large portfolios in a 2 million square foot campus, but my large portfolio is still only maybe 5% of their entire campus. So I have no say in how the experience is in the campus from the moment they walk in, but at least I can create that experience when they walk into my center. But if I can own, maybe not the entire 3 million square foot campus, but smaller buildings or a substantial chunk in an asset, then I can have a say in that experience, right from, as Anshuji said, walking into a hotel, what the washrooms are going to look like, everything. And I think as a brand, what we've decided is we would like to own as many assets. It brings a bit of stability to us as an organization as well. But more than that, the kind of materials we're using, the kind of fixtures and fittings we're adding, at least in the common areas, in the infrastructure piece, we can invest a little bit more because we own the asset. It's going to be with us. It's not like in 5 years' time, if this client goes, I have to also go, or et cetera, et cetera. So we're there for the long term. It gives our clients a little bit more comfort that, okay, they own the asset, they are the landlord. And so we can invest in the asset probably a little bit more than what I would do if I was in a rented asset, and build a more higher quality product and also maybe enhance that experience a little bit for the client. So those are the kind of things that, obviously there's other reasons why we like to buy assets. But
no, absolutely. That's the way it is. When you own something, you tend to take care of it much better. So as compared to a leased asset, be it a car, be it a house, be it a office, for sure. Sanjay, last question, and very popular question. I think I don't want a no comments answer, but when it comes to IPO, there's a huge thrust over, managed office operators looking at IPO. I don't want specifics of your plans, but just the general thing on what could be the challenges ahead. I think there has been some stellar IPO listings that have happened, and then there have been some good performance as well as the market value, market cap has increased. What do you think with $1 billion being, the capital being flowing towards a managed office sector by the retail investors, what do you think could be the challenges ahead?
See, Kaushik, again, I think as you also mentioned earlier, I think everybody agrees that flex space is rapidly increasing, right? You said it's $1 billion today, maybe 4 or 5 years down the line, I think we can see that clearly at a 8x or 9x of that. So there is a lot of opportunities and a lot of potential in this sector, and which also sort of attracts a lot of growth capital from private equities, from HNIs, from family offices, etc., etc. So I think in terms of challenges, again on the IPO, I think that's become a very sort of a primary route, if I may, for startups and flex spaces, and which is good in a way, because that will now start attracting a lot of global investors as well, and especially in the entire ecosystem. But I'll say, while challenges exist, I think again there is a lot of potential. There is a for the entire industry to scale, to innovate, and to cater to kind of demand that we have from the entire industry. But what I want to say is that the markets will reward the players, I think, who have a very clear and sort of a focused strategy, have got a strong foundation, and a clear path for profitability and the corporate governance. So these are the things that really need to be looked into. But yes, I mean, that's become a sort of a primary route right now.
I think the institutions and investors will ensure that the profitability comes in, come what may. So those difficult questions will keep coming.
Yeah, so gone are the days when investors used to look at the top line. It's only the bottom line right now.
Absolutely, absolutely. So thank you. That was a great panel discussion. That brings us to a close to the questions that I had to ask. If I had to summarize, tech is an important thing. In some ways, most of you guys are implementing it. GCCs probably will be the big fuel, will be driving the entire demand. Flexibility, which is the core of everything that you guys did, that's the genesis of the industry. I foresee that going forward, clients will keep asking more and more in terms of how flexible can you be till the time the band breaks. So we need to be on our toes in terms of understanding what is the client asking for and how can we customize the solutions for it. And the last piece, that if we can hotelize the entire design experience and ensure that anyone walking in from the time, whatever touch points that they have, be it the 5 senses that you engage or just an interaction with, it needs to be customized to what the client wants to have. So that brings us to a close to the entire thing. I will open the session to the audience if they would like to ask certain questions.
Any questions over here from the audience? Raise your hand, and thank you for switching that on. Any questions from the audience? If you may please raise your hand. You have a question, sir? Yeah. We have a bandwidth for 2 questions, so we can take one more after this.
Thank you so much. Quick one for Anshu and maybe Rahul. So the whole shared office space concept in India came with the whole startup thing, making it big, and then of course the requirement of spaces and shared space and so on and so forth. And the whole dynamics have changed now. So what do you think, or in your opinion, or in your experience, what's fueling this growth? So how are you sustaining this business? It can't be startups who are fueling the growth. It has to be more than that. Right? So what is that data? Where do you get this data from now?
If I understand your question correctly, you're saying that is the growth only coming from startups or there is another customer segment?
Absolutely.
Right?
Absolutely.
That's your question? Yeah. Okay, great. You're partially right on that. And I think the way to see it is that it is for us. Let me just first answer for myself and then what I think for an industry in a quick second. What we get in one part of our product strategy. So there are 3 different customer segments that we cater to, and we have, let's say, 2 different product categories in that we are building out. The smaller teams and the flexible solution that they want in terms of the tenure of the contract is the difference, okay? But it is not necessarily just the startup community. It is a mix of startup, the SMEs, and interestingly, the enterprise client as well. So we have, for example, a lot of spaces which are inhabited by large Indian corporate, but they are taking smaller spaces with us to cater to whether it is their satellite office or whether it is for a particular, because of a hybrid movement coming back into office, but it is a mix of it. That said, in that particular customer category or that category of cohort, in that cohort, the mix is a lot more of the startup and the SME category as opposed to the enterprise for us. And that is growing and that is fueling it at this point of time for us.
Adding up to that, also I think the way Ashish mentioned, now they are wanting to be in particular building, for example. Now the floor plates are too high and too bigger for them. Now what happens? They can't really leave that micro market. They have to be there. The only option is the flexibility that we can offer where they can still be in the building, but for those small spaces also. So that's additionally to what I think Anshu just said. That's one of the fueling factor. Enterprise is something which is now drastically changing, which is building in their own office concept, which is they don't really feel when they enter our shared office spaces, it's like a shared for them. It's like their own office space where they would have had their own door and own entry and, you know, completely own customization. So the look and feel still remains their own office, which now they're getting it. And that's why the comfort has come from their side. So it's fueling in more from that angle.
Any more questions over here? Yeah.
Hi, I'd like to understand the leasing strategy that you guys follow, because depending on your portfolio of clients, like say a startup would be more cost sensitive, so he would want to move away from, like, you know, the higher rental areas, versus a legacy business which would want to be in a particular location which can be expensive. So how do you manage that? Like,
You know, you really need to put it to one of us and ask this question. There will be very polarized answers.
Let me take this. Sorry, what's your name?
sorry?
What's your name?
My name is Rikesh.
Ritesh. So, Ritesh, how it works is, you know, typically for any of our business to sustain, you know, we want to just make sure that, you know, we have these balanced portfolios. Now, when I say balanced portfolios, it means it has to be a mix of a lot of things. You know, you cannot continue to just take assets on plain rental, as you rightly said, you know, because the markets will change, there will be cost-sensitive clients, so there will be a lot of other things. So you want to make sure that if your portfolios are balanced, where you have these partnerships with the developers, with the landlords, where some certain part, maybe a kind of capex is being invested by them, maybe it's a revenue share or a profit share models. So if you, as long as you can have those balanced portfolios, I think then it becomes very easy to sort of get these even clients who are a little more cost sensitive, rather than going to remote locations and just purely for those clients.
Adding up to that, also these days it's been fortunate that the developers have really understood that it's not really a client that they're giving or leasing for us as an operator, it's a value-added service for that particular building. So that really gives them the comfort and passes on the comfort to us to be in those kind of structured deals, where there's a lot of comfort from there. It could be a balance between an A grade or multiple micro markets or building. But for us to have that balance, I think that comfort has increased drastically in a couple of years, which is helping us out too.
I actually think there's enough of a market across all segments. So there's enough clients who want premium grade A buildings, and there's enough clients who, you know, there's enough for every market. As a brand, we've been very clear we want to work only in grade A plus buildings, and so I think our clientele also reflects that. Sometimes we have to be creative with how we structure the end deal to make sure that everyone at least thinks they're getting a good deal, but so that everyone does also get a good deal. But ideally, yes, there's a lot of, there was a time when you could go to a grade A developer and get any amount of rent free you want. Just after COVID, you could go to a grade A developer and name your rate. Today, it's completely the opposite. The market in India in commercial real estate is just phenomenal. It's booming. You go to the West, there's a very different story there. But in the West, the story is very much a shift to quality, a shift to buildings that have high ESG norms, or that follow ESG norms, LEED certification, green building certification, all this. So, and that's what at least the international clients that are coming into India are also looking for here. So that's what we focus on, and if that comes at a price, we are happy to take that risk at Redbrick to just make sure that we can sell that on to clients who want that, who demand that, and are happy to pay for it. So we have a slightly different leasing strategy, I guess.
So, unfortunately for me, both of you asked a question which was related to startups, and at Tablespace Technologies, we focus more on large-scale enterprises. So we hardly have any startups in our portfolio so far. But I can answer one point of your question, sir, that what keeps us fueling our growth. So it's obviously large-scale enterprise clients, where we try our level best to customize our solutions based on their business growth, providing them the flexibility, the agility, scaling up, scaling down with a blend of technology, which I mentioned earlier in one of the questions which Kaushik had asked me. So that's what keeping us, growing throughout. But we don't have the segment of startups in our portfolio so far.
Unfortunately, we are running a little late. If you can please maybe connect. Can we take another question, Sapna, or do we take it forward? Because I believe we are running a little late, so heartfelt apologies. Sir, I can please request you to please connect with them in the networking zone. And please, ladies and gentlemen, give them a huge round of applause. Thank you so much to the gentlemen for the questions as well. And just a quick update, apologies to Sanjay sir as well. The designation printed in the paper was wrong. The correct designation for Sanjay sir is co-founder and managing partner in Incuspaze. So just wanted to apologize to you for that. That was not intentional, so thank you so much. And on that note, to kind of felicitate them on stage, I'll request Mr. Shoaib Sheikh, Sales Head, Nemetschek Architecture and Design Business from Nemetschek India Private Limited, Nemetschek Group, to please join me on stage to give away the token of appreciation. And ladies and gentlemen, it's a full house. Can I please have some more appreciation coming in for the first panel discussion of the day? Thank you. Once all the token of appreciations are given away, we'll do a group photo with all of you over here at the front. Thank you so much. Can we please have a huge round of applause for all of them, and I'll request all of you to please kindly come forward and pose for a group photograph. Like we all truly believe when our photos are being clicked, if people are appreciating them, the smile kind of widens up a lot more. So thank you so much for doing that and being an encouraging audience over here. Thank you so much to all of you for sharing your insights. Request you all to take your seats. Thank you.